Good day, ladies and gentlemen. In this particular video, I'm going to be teaching you a trading system that you've never seen anywhere else on the internet. Okay, so in this video, I'm going to be proving to you the fact that I am the master of strategies. Okay, so many of you have actually learned CISD, okay, changing state of delivery. So you've learned changing state of delivery as a trading system, all right, and some of you use this to trade, and some of you have also learned AMD, which is what we call the power of three. Okay, some of you have learned power of three. Okay, now what is power of three? Now this power of three simply has to do with accumulation, manipulation, and distribution. And if you are a power of three trader, you know that you're always trying to trade the distribution phase. Okay, so these are two different trading ideologies, but in this video I'm going to be giving you a singular trading system that fuses these two ideologies together. Okay, so I'll be putting the two trading systems together to create a powerful trading system that you can use to milk the market. Okay, so without further ado, let's dive right into it. So for those that do not know what power of three is or what CISD is, let me quickly give you a quick recap of what these stuff are. Okay, if you want in-depth understanding, you would need to go and watch some of my videos on accumulation, manipulation, distribution, and changing state of delivery. I have those videos, but a quick recap is what I will do on this particular video so you don't get lost. All right, so a change in state of delivery simply has to do with when the market moves from an uptrend into a downtrend. So when you have this particular change like this in the state of delivery from uptrend to downtrend like this, you would notice that there's a particular candle at this top, the last bullish candle right here, that took out liquidity. When a bearish candle closes below that last bullish candle that took out liquidity, that is when you have a change in the state of delivery. So that's exactly when the price started reversing from uptrend to downtrend. When I give a few examples, you're going to understand what I mean. Okay, so that's for change in state of delivery. It also happens when you have a downtrending market like this, giving you lower highs and lower lows, and all of a sudden you have something like this. Okay, so if you check this, let me point from the other side, this price leg right here, you would notice that there is a last bearish candle that took out liquidity. Okay, so that last bearish candle that took out liquidity, when you have a bullish candle close beyond or above that candle, that's when you have your change in state of delivery. So the difference between change in state of delivery and change of character is that change in state of delivery, helps you get into the trade, into the reversal trade faster than change of character. For change of character, you need to wait for a break of structure. Okay, but in this case, you're not waiting for any break of structure. Once you have your last candle that takes out liquidity, then another candle closes beyond it. That's your change in state of delivery. Okay, so when I give you the examples, you understand what I mean by that. So let me quickly give you a quick recap on what accumulation, manipulation, and distribution means. Accumulation is when the market is simply consolidating. Then manipulation, as the name implies, price is going to deceive traders to think market is moving in a certain direction, let's say upwards in this case. Then traders will take a buy trade, then all of a sudden market moves in the downwards direction, which is the distribution phase. Okay, it also happens in the other way. You have accumulation, it manipulates downwards, traders taking a trade in the downwards direction, then market pushes aggressively in the upwards direction. Okay, so that's the distribution phase. So this is what we call AMD. So in this context, what I'm going to be using as my AMD will be Asian session. Okay, the Asian session is going to stand as our accumulation phase. We already know that Asian session usually accumulates most times. Okay, it consolidates. So the Asian session will be our accumulation phase. Then a break above or below the Asian session is going to mark our manipulation phase. Then the movement in the opposite direction will be our distribution phase. So now I'm going into the strategy proper. All right, so the very first thing you need for this strategy is you need to come to this indicator icon right here. Okay, so you click on the indicator icon. Let me just do that right now. Click on the indicator icon. Then on this search bar right here, you're going to type session. Okay, you're going to type session. All right. So when you type session, it's going to bring a couple options. Just scroll down and look for session by Lux Algo. You can see this one, session by Lux Algo. This is the one you have to click on. So just click somewhere here and it's going to be added to your chart. Okay, so it has been successfully added to the charts. So you have to go back. So when you add the session by Lux Algo to your chart, it's going to look messy like this. Okay, you can see so many colors, depicting Asian session, Tokyo session, London session, New York session. This is not what we need. We don't need it to look like this. Okay, so what you want to do is you want to click on this area. Okay, you are trying to edit the settings. Okay, so you click on that area like this, and then you click on these three dots right here. Just follow the steps I'm giving you. So when you're on this interface, you scroll down. All right, so when you scroll down, you click on settings. You can see settings down there. So you click on settings right here. So what you want to do is you're going to be unchecking the box, this box for New York, you uncheck it. Also the range, you uncheck it. You do the same for London session, you uncheck this box, you uncheck the range. So just follow me as I'm unchecking it. Uncheck this. Okay, move this up, uncheck the range, move up, uncheck London, uncheck the range, move up. For Tokyo, do not uncheck Tokyo. Okay, don't uncheck Tokyo, leave Tokyo the way Tokyo is. Move down, then uncheck Sydney, also uncheck the range. So the only thing you will not uncheck is Tokyo and the range for Tokyo. So when you're done, you click on OK down there. Okay, you click on OK right here in order to complete the settings. So click on OK. So you can see the way it is now. The only thing you have on your chart right now is just the Tokyo session. So what you want to do in combining the two systems that I'm going to be teaching you, what you want to do is you want to wait for Tokyo, the Asian session to end. So you want to see price run above the Tokyo session or below the session. Okay, because liquidity is going to be resting above and below. So anyone that is taken out first is going to lead to a reversal. So that first movement whereby price goes either below or above, in this case it went below the Tokyo session, which is the Asian session. This is the manipulative move. The Asian session itself is our accumulation. Remember our power of three: accumulation, manipulation, then distribution. So when price goes below or above, in this case below, let me take this as my first example. So price went below the Asian session, taking the liquidity below that session. So this is our manipulation. How are we going to get involved in the distribution in order to frame a trade idea? Now that the manipulation is complete with this candle going below the session, what you want to do is you want to change the state of delivery to enter the market. So the last candle that took liquidity, which is this one, okay, this is the last bearish candle that took liquidity to the downside. Okay, when price closes above this candle, what you want to do is you want to enter a buy trade, and how you do it is the opening price of this last candle, you place an horizontal line there. That is where you'll be waiting for price to come back to in order for you to take a buy trade. So in this case, let me move this horizontal line. Okay, cancel. So I want to move this horizontal line to the opening price. So the opening price of that candle is somewhere here. So you can see that your stop loss is going to be your stop loss will be below excuse me, your stop loss will be below that candle. Okay, so below this candle where you add your change state of delivery, that's where you're going to place your stop loss. All right, so what do you have here? Price went above that level and closed above it. You can see this. So when it comes back to that level, you'll be taking your buy trade. You can target 1-to-1. All right, so when it gets to 1-to-1, you can take 50% off, move stop loss to break even, then ride the wave to the upward direction, or it can even come and take you out on break even, but you would have taken some profit. Okay, so you can see how it played out. Price lingered for some time, then finally pushed in the upward direction, so you would have made money with this system. Okay, your stop loss would have been a few pips below this candle, which is your change in state of delivery candle. All right, remember where you have to place your entry. It has to be at the opening price of that candle that led to the change in state of delivery. Okay, and please don't get it twisted. Sometimes this candle that ran liquidity to the downside might not be the last bearish candle. You might have a situation whereby other bearish candles will come after. So if you have other bearish candles coming after, the last bearish candle along that line, okay, the last one that took out liquidity before price moved in the opposite direction, that's the one you will use to frame your change in state of delivery. Let me go to another example. Probably you see a situation like that. So we've taken this trade now. We're waiting for the next Asian session, which will be in the following day. All right, let me move this up a bit. Okay, so let's see if price is going to take liquidity to the upside or to the downside. So price is just coming out of the Asian session right here. Let's see the liquidity that it's going to take. It took liquidity to the upside. Okay, so this is our manipulative move. Accumulation took place in the Asian session. Price manipulated in the upward direction, taking the liquidity above the Asian session. So we'll be looking for the last candle that will, take liquidity to the upside. Then a bearish candle has to close below that candle. Okay, so any bullish candle we have around here, whereby a bearish candle closes below it, we use that bullish candle to frame our change in state of delivery. So let's see. So right here, this is the last bullish candle here. This candle did not close below it, but we have this candle closing below it. So that's our change in state of delivery. We place an horizontal line at the bottom of this bullish candle. Then we wait for price to retest it. Then we enter. Stop loss is going to be a few pips above this bullish candle, which we use as our change in state of delivery. So I want to move an horizontal line to the bottom of that candle. If you're getting any value from this video, please subscribe to the channel. So trying to move this horizontal line to the bottom of that candle. Please bear with me. I don't do my analysis most times on TradingView, so some of these tools are just they're just misbehaving in my hands. Alright, so you can see what happened. Price came back to that level, retesting that level, and then we'll be expecting price to push in a downwards direction. Remember, your stop loss is going to be a few pips above this. I've said that before. So you can see price started pushing in the downwards direction, so you would have made money with this. Remember, 1-to-1, take out some profit, move stop loss to break even. Okay, so you would have made money with this downwards movement from here. Remember, this is where you entered your trade, and price moved all the way down to this point. So I think it would have stopped you out on break even on this particular trade. Yes, so at this point it went above the level, so you might have gotten stopped out. Okay, but you would have made money with these downwards movements with right risk management and trade management. Okay, so this is another example right here. We have our Asian session, and then we have to wait to see if price will take liquidity to the upside or the downside. I can see price pushing up, so I think it's the liquidity to the upside that price wants to take. Exactly. So price took liquidity resting above the Asian session with this big bullish candle. Okay, now this candle is now the last candle that took liquidity to the upside. So we're waiting for this last bullish candle for a bearish candle to close below it, and you can see right here, let me zoom in, this bearish candle right here. Okay, this bearish candle right here closed below this level, right? So this candle is what we are going to use to frame our change in state of delivery. Okay, so I'm going to place an horizontal line. I'll place an horizontal line at the bottom of that candle, which is like the open. That would be the opening price of the candle. That's where I place my horizontal line. Okay, so I've done that. Now I'll wait for price to come back to that level. Your stop loss will be a few pips above this candle, this big bullish candle, and you can see what happened. Price came back to retest that level with this bullish candle right here. So this would have tagged you in. Okay, target 1 to 1, take some profits off, move stop loss to break even, and ride the wave to the downside. You can see the way price just kept moving in the downwards direction. Okay, I believe you've gotten a hang of how this particular trading system works. Please, if you're a new viewer and you got value, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.